Hi there, I'm Darren McDermott and you're watching Dukascopy TV for this special update on Chinese manufacturing. A Chinese manufacturing gauge showed the first contraction in 6 months in January as companies cut jobs and credit market stresses damped confidence. Now I'm joined by Chris Williamson from Markit in London. So Chris, do you think we will continue to see manufacturing decline?
I certainly think that we're seeing a very weak trend, a disappointing trend in Chinese manufacturing at the moment. Whether we continue to see decline is difficult to tell. I think that we should eventually see things pick up. Whether that will be as early as February, I don't know. But certainly global economic growth is picking up. Countries such as the US, we've seen today, is expanding at a reasonable pace. The UK is also Eurozone. The Eurozone recovery is gathering momentum. So all of these factors should play into the Chinese manufacturing sector and help lift growth there. But certainly it's nothing like the rate of growth we saw before the financial crisis. And manufacturing is by no means the powerhouse it was before the crisis in terms of generating GDP growth rates. So I think the message from that survey for 2014 really is, another year maybe like 2013 where you're going to get GDP growth in the region of maybe 7.5%, 7%, rather than the double-digit rates we saw before the crisis.
Factory output rose 9.7% in December from a year earlier. This is the slowest pace in 5 months. Now, what are your thoughts on this, Chris?
Again, it's a reasonable pace of growth, but this January survey from the PMI, which obviously measures month-on-month changes, not year-on-year, suggests you could see some further easing in that growth of industrial production. Perhaps one of the key focuses there is on what's happening with the Chinese service sector, which we'll find out more obviously next week with those services PMIs.
And finally, Chris, do you think China will struggle to maintain its 7.5% economic growth this year?
Well, I think the central bank's going to focus on keeping liquidity in the system, especially over the holiday periods. I think that's the main job, just keep the functioning financial system on track. There's also a lot to do in terms of reforming markets and opening up markets, but that's much longer term. We saw last year the increased willingness to open up and reform markets. So hopefully we'll see more of that, all of which is great news for the longer term. Shorter term, it's a transition period. We're trying to steer the economy away from goods exports and investment towards domestic consumption. That's a long, slow process, and inevitably going to see some pain in the transition period, of which 2014 is likely to be one.
Chris, thank you very much. It was a pleasure. Well, viewers, do stay tuned as we have plenty more interviews coming your way.